Good evening, class. My name is Victor Obiefna, and I will be taking you on taxation for foundation class. Today, we'll be looking at loss relief. Loss relief is one aspect of taxation that we must be familiar with because most times when businesses which are in operation in some of the accounting years or tax years, they had to incur loss, and thereby they won't be able to pay tax, but they still pay minimum tax. So today we'll be looking at loss relief, and I know you must be familiar. Some of you are familiar with the topic already because this you are attending ICAN class, and I believe most of you must have come across it. So the objective of our class today, we'll be looking at the introduction, we'll be looking at types of loss reliefs, rules on loss relief, treatment of losses under commencement and cessation of business. Then we'll look at worked examples. We all know about commencement rule and cessation rule. It still implies this here. Loss relief is just an aspect. It's just an aspect of tax. So introduction. A company makes a loss from its trade or business when its allowable operating expenses exceeds its total income or earnings. A company that makes a loss from its trade or business is entitled to relief such as carrying it forward, is entitled to relieve such loss by carrying it forward for set off against the assessable profit of subsequent assessment years, commencing from the year following that in which the loss occurs. That's to say, when a company incurs loss, the company is expected to carry the loss forward and set it off against assessable profits in subsequent years following the year the loss occurred. Prior to May 2007, losses could only be carried forward for 4 assessment years commencing from the year following that in which the loss occurs, except a company which is involved in agro-allied trade or business. However, from May 2007, the restriction has been removed for all companies except insurance company. That is to say, period to May 2007, companies are only allowed to carry over their loss for just 4 years aside agro-allied company. But from 2007 till date, the only company the only company that carries over its loss for just a period of 4 years is insurance company. Now we'll be looking at types of loss relief. We have current year loss relief and carry forward loss relief. Current year loss relief, this is applicable to individuals. In this case, losses incurred from a particular source of income can be relieved against other sources. For example, loss from any source of income can be relieved against income from any other sources. Note, in order to enjoy this relief, a written claim must be made within 12 months after the end of the assessment in which the losses arised. It is important to note also that the current year loss relief is applicable to a loss incurred only in the first year. Thus, current year loss relief is only applicable to a loss incurred only in the first year. Any unrelieved losses can only be set off against profits from the source from which the loss is incurred. Now, looking at the second type of loss relief, the current year loss relief. This loss relief is mainly for individuals. It's mainly for individuals. It's only for individuals, not mainly. It's only set out for individuals, whereby a loss incurred can be set off against any other income within that year. But once it exceeds that year, the losses will be carried forward, and it can only be set off against the same source of income which it was incurred. Now, carry forward loss relief. This is the one we are mostly involved in. This applies to individuals and corporate bodies. The loss relief is available only against profit from the same source of income. That is, this loss relief can only be set off against the same source of income. I don't know if you have any question at this point. If you have any question, you have to ask so I can attend to it. Rules on loss relief. Rules on loss relief. The following points are to be noted in application of the rules on loss relief. These are guiding rules. That's if you are to relieve, a company is to apply for loss relief, or the company is to relieve its losses. 1. Trading loss to be deducted from accessible profits. That's the number one rule. Trading loss to be deducted from accessible profits of an assessment year shall not exceed the actual loss incurred by the company in the previous assessment. That is to say, trading loss to be deducted in any year of assessment. Trading loss to be deducted from the assessable profit should not exceed the actual loss incurred. That is, a company might incur a loss of 100 million or 1 million, and then due to basis period due to basis period adjustment due to basis period adjustment there might be possibility that the loss might exceed the actual loss. That's using the basis period computation. We are told that whichever adjusted loss you calculate and you get, the actual loss relief should not exceed the actual loss relief should not exceed the loss which was incurred. We'll take an illustration on this, you will understand better. Then losses are not aggregated with accessible profits in the computation of a company's total profits. In strict compliance with the provision of Section 31, subsection 1 of CETA, consequently, a trading loss from one of the company's sources of profits cannot be set off against the profits from another source. A loss incurred from a particular line of business can only be relieved in future years from accessible profit derived from the same source or line of business. That is to say, when you are setting off loss, a loss can only be set off from the particular line of business or source of income which the loss was incurred. That's what this is telling us. Then the next, when losses incurred in two different assessment years, when losses incurred in two different assessment years are being carried forward against future profits, the first loss incurred will be relieved in priority to the subsequent loss, subject to the 4-year loss relief period of insurance company. That is to say, when losses are being when a company incurs a loss when a company incurs a loss in two different assessment years, we are told that the losses will be relieved in the order it was incurred. That is, first in, more like a first in first out situation, whereby the loss you incurred first should be relieved. That if you incurred loss in a particular year, let's say year 2003, then you incurred another loss year 2004, and in 2005 you made profit, you should first relieve the loss you incurred in year 2003 before you relieve that of 2004. And this is sub this the major concern of this also is with regards to loss relief on insurance companies. That's to say, for insurance company, their loss carryover is just 4 years. They can only carry a loss over for 4 years. That is to say, if within 4 years a company has been incurring losses, in year five, if they are to make profits, you should know that the profit they make in the first year, I told you they made loss first year, second year, third year, fourth year. In fifth year they made profit. You should know that the loss they made in year one, in the fourth year you will relieve that loss. That's in year five will make it in year five will make it the fourth year. That's, you have to make sure you relieve that loss. If the company fails to relieve the loss wholly, probably because the profit made wasn't enough, the remaining losses will be written off. Then we'll now be focused on losses of probably year two and all the rest. I don't know if you get the point I'm trying to make. When trade ceases, that's the fourth one. When trade ceases, any terminal loss resulting therefrom, which could not be relieved in the year of cessation due to insufficiency or non-availability of profit, is deemed loss. That's to say, when there is cessation of business, any loss that could not be relieved is deemed loss. You don't consider that again. Now I'm taking the first illustration. If there's any question on this, please try and ask. Because as I said earlier when I started handling tax, I told you that taxation is all about tax laws. If you know the tax laws, you know how to treat each item with regards to tax. Illustration 1. AK Nigerian Limited has been sustaining losses for many years but made a good recovery in 2007. The adjusted results of the company for the following years as follows. Year ended 31st December 2002, they made a loss of 350. 2003, they made a loss of 250. Down to 2005, loss of 75,000. They started making profit from 2006, profit of 79,000. And then 2007, profit of 450,000. The capital allowance for the periods are as follows. Years of assessment 2003 to 2006. You have it all listed there: 25,000, 37,500, 32,000, 45,000 required. Compute the company's tax liability for 2006 to 2007 assessment years. Now, this is a typical illustration. Looking at the solution here, looking at the solution, looking at the solution, remember we have the assessment years. The years we are told to prepare is 2003 2006. There is no cessation or commencement, so we'll be using preceding year basis. I know we must be very good with our basis period. For we know company pays tax in preceding year basis, so in 2003, the basis period being 1st January 2002 to 31st December 2002. That is, the loss they incurred is a loss of 350,000, which we have it there. We had capital allowance. Capital allowance for 2003 is 25,000. We know capital allowance is in actual year basis, and we know what capital allowance is. That is in place of depreciation for tax purpose. You add our capital allowance, unrelieved loss and capital allowance carried forward is 375,000. Looking at 2004, 2004, we have basis period, we have it on preceding year basis. 2004, there we'll be looking at the loss incurred in 2003, which is 250,000. Unrelieved loss brought forward, that is loss from the last year, 350. If you look at the illustration, it's quite explanatory. Capital allowance for the year, 375, 37,500. Capital allowance brought forward, you have it, they aggregate it. Then you have unrelieved capital allowance and unrelieved loss. Then looking at 2005, we have the loss incurred in 2004. We have it, the unrelieved loss carried forward, that's brought forward. We have it 600, aggregate it. Capital allowance for the year, capital allowance brought forward, we have it here. Unrelieved loss and capital allowance. Then the next is 2006. We have the basis period there. We have the loss. In 2006, we are considering the loss incurred in 2005. Unrelieved loss 1,157,000. You aggregate it. We have capital allowance for the year. Then capital allowance brought forward. We have it here. Then if you check, these are the losses carried forward. As at 2005, the losses AK Nigeria Limited carried forward is 1,151,500. If you notice, the losses could be carried forward indefinitely. That's it will be carried forward till the company is able to relieve the losses, unlike insurance company. Now, looking at the second illustration, please, if you have any question here, you can write it down, send the question to me through the website, so I will be able to reply you. Then if you are still confused or you still want a further explanation, I could still go forward probably on WhatsApp to give you further illustrations, or still do it over here, depending on how you will want it. Looking at illustration 2, John Enterprises commenced business. Commenced business. You should be looking at commencement rule. Commenced business on 1st September 2009, and the profit and loss as an adjusted for tax purpose are as follows. Over here, we just have the adjusted profit. Our major concern here is to lay emphasis on how you treat losses. In actual sense, all these adjusted profits, you'll be given a question where you will solve it. Then you'll be the one that will find out that the company doesn't have a taxable profit, that the year of assessment ended up in a loss. So looking at this question, commencement rule. John commenced business in 1st September 2009, and the adjusted profit for tax purpose, adjusted profit or loss for tax purpose as follows. As at 31st August 2010, John made a loss of 240,000. 2011 August 31st, he made a profit of 400. 2011 August 31st, made a profit of 320,000. Required: compute the amount of losses that can be relieved, assuming that John Enterprises does not exercise its right of election. Right of election, we all know our commencement rule. I don't know if you are not familiar, if any of you is not familiar with the commencement rule, please try and indicate, so that we'll put you through on that. Though we still have to look at it. But if you are confused in any way, just indicate. But I knew we must have gone through this. The commencement rule, in taxation, we have commencement rule, we have cessation, rule of cessation, we have change in accounting date. These are the three things that affect basis period. And right of election, that's the business could either decide to go by actual year basis or in preceding year basis. So here we are told that the enterprise does not John Enterprise does not exercise its right of election. So we have here the adjusted profit and loss required. Compute the amount of losses that could be relieved, assuming that John Enterprise doesn't exercise his right of election. So the first thing we need to do here is to work out our basis period and the adjusted profit. That's the number one thing. If you have make any form of mistake over here, you know that you failed the question and you won't be able to get the last answer. The ICAN marking scheme is by posting, but in tax, it's always best if you carry out the calculations accurately. So we have the basis period. It started business in 1st September 2009, and commencement rule from the day of commencement to 31st December of that year. If you calculate it, 1st September to 31st December, that's 4 months. 4 over 12 multiplied by 240, which will give you 80,000. That's the loss of 80,000. In year 2010, from day of commencement, that's the second year, from day of commencement to the next 12 months. The next 12 months here is 31st August 2010. If you calculate it, it's rhymed with the adjusted profit, so there is no form of adjustment. That's why we have 12 over 12, 1 multiplied by 240, which will still give you a loss of 240. In year 2011, as they didn't exercise their right of election, that would be the year they make up account. You count back to the next 12 months. That's 31st August 2010. Count back to 12 months. You will get 1st September 2009. Then from that will still you will notice that we still have the same basis period with 2010. That's 240,000. Then from 2012, it will be in preceding year basis. 2012 basis period, that's 1st September 2010 to 31st August 2011, which is a profit of 400,000. Then in 2013, look at the basis period there, that's a profit of 350, that's 320,000. Now looking at the actual solution, we've looked at the workings, we've done the most important thing in the working to get our basis period and our adjusted profits. So John Enterprises computation of total loss relieved for the relevant assessment years. We have AY actual year 2009, that's adjusted loss which we have here from our calculation. Adjusted loss is 80,000. Loss relieved nil. Unrelieved loss carry forward 80,000. 2010 adjusted loss based on our basis period, which we have here, is 240,000. Unrelieved loss from last year, 80,000. If you aggregate it, you have 320,000. Now remember our rule, which says that loss relieved should not be more than the loss incurred. If you check the adjusted profit in adjusted loss in 2010 plus unrelieved loss in 2009 will give you 320, which is above the actual loss incurred, which is 240. So here we have to restrict to actual loss incurred, which is 240,000. That's in 2010. Unrelieved loss is what? 240,000. In 2011, adjusted loss for 2011 is 240,000. Look at it here. Then unrelieved loss brought forward from 2010 is 240,000. If you aggregate the two of them, you have 480,000. Now you still have to restrict this, because if you don't restrict and carry it forward, the company will have to relieve more than the loss incurred. So we have to restrict the loss incurred to the actual loss, which is 240,000. That's to say, if you are calculating to get adjusted profit or adjusted loss, make sure that the amount of loss you are relieving should not be more than the loss incurred. If you calculate adjusted loss, add the loss, the unrelieved loss carried brought forward, and you aggregate them, and those losses are beyond the actual loss incurred, you have to restrict it to the actual loss which was incurred. Please, if there's any question here, ask me. Year 2011, year 2011, year 2012, sorry, we have adjusted profit of 400,000. Please, there's a mistake. This should be 400,000. I have 400,00. It should be 400,000. Because if you look at our calculation here, what we have there is 400,000. It's a typographical error. 400,000. Then unrelieved loss brought forward from actual year 2011. Unrelieved loss brought forward from 2011. That is 240,000. Remember that all this loss relief is calculated cumulatively. I know we are all accountants. I don't think there should be confusion there. Let me leave that. What I mean is that it's calculated cumulatively. You wouldn't say in 2012 now they made profit of 400,000. You will say you will leave the loss made in 2009 80,000. Then in 2000, then if you release 80,000, the next one you're going to leave is 240,000 in 2010. Then the next one 240,000 in 2011. It is calculated cumulatively. So you will relieve the loss from the previous year, which you cumulatively calculated. You relieve the loss of 240,000, which you give you accessible profit of 130,000. Now this is now the profit you will work with. Now in 2013, the adjusted profit is 320,000. Loss relieved, we are no longer carrying any loss forward because we totally relieved all our losses. Accessible profit 320,000. Note, the loss relieved amounted to 240,000. That is the actual loss incurred. This is the actual loss incurred, and that's how it's meant to be. Now you can write down these notes. Write these notes down, then ask me questions where there is confusion. And in our next class, I will give you the next topic we'll be handling. But before then, go through your ICAN, go through Pathfinders to pick up questions relating to this topic we treated. Either you solve it or you send it to me, or you give us the date, the diet. You give us the diet and the question number so we could all get it. Probably I can get a soft copy of for everyone. We share it among ourselves. Then in our next class we look at it. Either we do that we solve past question relating to this topic in our next class, or we move to the next topic. If you have any question you would like us to solve together regarding to this topic, let me know. Let us know. But if you don't, we'll move over to the next topic. Before our next class, I will let you know the next topic we'll be handling. Thank you very much, and have a good night rest. My name is Victor, and you can always ask me questions regarding to areas you are finding difficult. Thank you.